Hey, it's Terry Bontemps. My last name Bontemps means good times, in case you guys didn't know it. Tell you what, I'm getting ready to go out today and do a little boating. I'm going to do a little studying. I got a seminar coming up at the Administration Inc. I got one in Sacramento and one in Oakland. I want to invite you guys to it so you can come out and learn more about notes. What we're going to be talking about is how to buy notes using your self-directed IRA. And I'll tell you what, there's two things that you guys really need to know about buying notes, okay? Most of us have thought about becoming landlords and owning rental property for the cash flow, but not many of us have thought about buying the note, okay, and getting the same cash flow without all the hassles of tenants, toilets, trash, maintenance, and liability. So that's what I'm going to be teaching for about an hour with Intrust. Now, there's two reasons. There's two ways to make money in real estate. One is when the market's appreciating, okay, and everybody knows that 95% of real estate investors have learned how to make money with an appreciating market. Okay, what I'm going to be talking about is in a depreciating market, buying the debt at a discount. I'm a martial arts background, and we always talk about yin and yang and the balance. So again, you always got to know how to make money in good times, you got to know how to make money in bad times. And that's what I do. About 5% of investors understand how to buy defaulted notes and non-performing paper. There's three reasons why you want to own these defaulted notes. Number one is cash flow. I've already talked about that. Cash flow is king. Number two, you want to be able to earn high double interest rates returns on your investments. I want you guys to say this. When I buy discounted notes at a discount, my profits skyrocket. So again, here it goes. My profits skyrocket when I discount. That's absolutely correct. I'm talking about 25, 50, 60, 70, 80, 90, 100%. The cheaper you buy that note for at a discount, the higher your profits are going to be, the higher your return is going to be. And number three is to essentially own or control the property. What that means is you can buy that note at a discount and be able to buy that property cheaper than what you normally would be able to. Now there's two reasons, okay, that you want to buy notes, and you want to be able to control the property, but number one and two is going to be the property has to be rentable or sellable. If you're going to buy a note and the property is not rentable or sellable, and if you have to foreclose and take that property back and it has no value, you've essentially wasted your money. That's correct. But anyway, as you can see, I'm getting ready to go out and do a little boat today. I got a little early, get some studying in, and as you can see, this nice houseboat right here is called Life is Good. So I'm on my boat, not as big as that one, but essentially I'm going to have a great time, do some studying. And before I finish, I just want to tell you guys, what are the risks? And I know you guys are worried about that, the risk of buying defaulted notes. The number one risk you got to understand is that you don't know what you're doing. And that's anything, whether it be notes, real estate, boating. When you don't know what you're doing, that's how you end up losing. So you need to get educated about what you're doing. Number two, most people say, well, what happens? How do I make money? How do I make money? And in buying notes, defaulted notes, there's 7 different exit strategies. Unfortunately, you're going to have to come to my seminar or look at more of my videos to understand those strategies and concepts, because I simply just don't have time to give you all 7. That's probably good 2 hours worth of training there, but there's 7 different exit strategies. Most real estate investors, when they buy a property, they only have 2 exit strategies. That's the buy and that's the sell. But owning the notes, you have 7 different exit strategies. And again, number 3, people say, well, Terry, why would I buy something from the bank that the bank's not getting payments on? That's the million-dollar question. That's the hang-up for most investors. That's why they don't get involved, because they figure, hey, look, the bank's not getting payments. Why would they buy that from the bank? And the reason you want to buy that is simply this. It goes back to the 3 reasons you want to own defaulted notes. Cash flow, collecting a high interest rate return on your investment, and to possibly own or control the property. That's the reason you buy defaulted notes. Hey guys, it was great. I hope you can make it to the seminar again, and it's with Intrust Administration, and we're going to talk about again how to use your self-directed IRA to buy defaulted notes and non-performing paper. Okay, I need to get going. Good talking to you guys. We'll see you on the other side.